Hello there, welcome back to my YouTube channel, Investment Mindset. Today, in this video, I will be covering on a stock trading on Bursa Malaysia with stock ticker MTAG. I decided to do a third follow-up video on MTAG as I could feel the sentiments among the retailers on this counter is getting weak and getting more anxious as the days pass by. MTAG Group Berhad is a converter company providing the services of label and sticker printing and customized converting services for various material based in Malaysia. In addition, it distributes industrial tapes and adhesive products under the brands 3M and Henkel. Its segments consist of converting, distribution, and investment holding. Since the share price gapped down from the prior day's closing of 60.5 cents to as low as 39 cents on the 25th of February this year, following the announcements of a weaker set of quarterly financial results amidst concerns of a possible loss of key clients, before inching up to close at 44 cents on that same day. It has since rebounded to as high as 50 cents on the 7th of March, before pulling back since then. As of today, MTAG closed at 43 cents. I know lately many retailers are feeling anxious and impatient as to the lack of actions on this stock price. In fact, some retailers even think that more downside may be coming for MTAG. While anything could happen in the stock market, technically, if you have bought MTAG at current price range of 43 to 45 cents, I would say it is quite an attractive entry price. Why? Because do you know that at the current price, MTAG last closed at 43 cents, this stock is trading close to a 2-year low of its price to book ratio and also to its price to sale ratio. Technically, it is also trading at an attractive level, with I have also done a full technical analysis on MTAG on my first video. If you have not watched it, you may watch it later after end of this one. If this video is helpful to you and you enjoy this type of content, do leave a like and subscribe and press the bell so that you will not miss out on my next video. Thank you. The rebound to the upside on MTAG stock is only a matter of time. Why do I say that? Now let me share with you more good signs I have uncovered with MTAG. MTAG Group Berhad has a strong financial strength, which is typical of a stable company. The company has a healthy and comfortable level of interest coverage and an expanding operating margin. Margin expansion is usually a good sign for any company. Operating margin percentage, also known as operating income margin, is the ratio of operating income divided by net sales or revenue, usually presented in percentage. MTAG Group Berhad's operating margin for the fiscal year that ended in June 2022 is calculated as operating income as of June 2022 divided by revenue as of June 2022, which was 36.694 divided by 180.163, and it has an operating margin of 20.37%. MTAG Group Berhad's operating margin for the quarter that ended in the most recent December 2022 has garnered to be around 16.97%. Just like gross margin percentage, it is important to see a company maintains its operating margin over time. Among the same industry, a company with higher operating margin is more efficient in its operation. Over here we can see that MTAG has got the highest operating margin within its own sector. It is also more stable during industry slowdown or a recession, which we know that currently most of the mainstream media are pounding on a looming recession ahead in this year. So we could be assured that should economic downturn occur this year or any time down the road, MTAG, being the market leader with the better operating margin, will have more room to maneuver and be more competitive in the market. Peter Lynch, one of the world's most phenomenal stock investors, also prefers stock or businesses with higher operating margin than those with lower operating margins. If a company is facing competition, its operating margin percentage may decline. Often, the operating margin percentage declines well before the company's revenue or even profit decline. Therefore, operating margin percentage is a very important indicator of whether a company is facing problems. For instance, by 2012, Nokia's problems were well known and its stock has lost more than 90% of its market value since 2007, but Nokia's operating margin had already been in decline since 2002, although its earnings per share were still rising. If investors had paid attention to its operating margin percentage, would have avoided this huge loss. The same can be said for research in motion stock. Therefore, operating margin percentage is a very important criteria in filtering out strong company versus a weak one. In this instance, we can say that MTAG fit to be categorized under a strong company as it has expanding operating margin percentage. As a leading labels and stickers printing and materials converting specialist, MTAG is also an indirect proxy to the fast-growing electronics manufacturing services industry in Malaysia. Even if MTAG do really lose some of its key clients anytime down the road as rumored, isn't this the norm in the world of businesses? What matters is, can MTAG stomach in such a setback? As we have analyzed earlier, MTAG do have a strong financial strength. Hence, I am pretty sure MTAG is more than capable to weather through such a temporary setback before they would continue to look for new clients and be back even stronger. In conclusion, for me, MTAG stock is still a buy. The potential upside will be around 50 cents to 52 cents, where we can see that at 52 cents, it will also be met with a bow tie necktie, which poses as a strong resistance. And if MTAG price is able to break through this strong resistance, then only we can look to the second potential upside for it to go up all the way to around 56 cents, and if it's stronger, at least to fill the gap window over here, which is at around 58 cents. In investing or trading, it requires not only knowledge but also lots and lots of patience. Going forward, consensus is estimating MTAG would make net profit of 38.5 million ringgit in fiscal year June 2023 and 39.4 million ringgit in fiscal year June 2024, which translates to forward PE ratio of 7.8 times and 7.6 times respectively. So by then, if you are still holding on to MTAG share, you may want to pay attention to this date and events. Thank you for watching to this end. May the good Lord bless you and your family abundantly. So before I end my video, as usual, if you find value in my video, do give a like, subscribe if you have not done so, and do turn on the notification bell so that you will not miss out on any of my future uploads. Bye, and I shall see you again in my next video.